Hello and welcome to the BLG conversation on blind pools. We're going to talk about CPCs, SPACs, and other acronyms that may or may not be of interest to you, but I'm hoping they're of interest, and I hope that we are going to be able to provide some really valuable insight today. I am Melinda Park, and I am a senior lawyer at the Securities and Capital Markets Group of BLG in the Calgary office. And I know that there's been a lot of interest in SPACs lately, and what does that even mean? The conversation around special purpose acquisition corporations. However, today what we want to do is go a little bit deeper. We want to see what the Canadian blind pool history is all about. What is the concept that has been around the Canadian marketplace for blind pools? And to help with that discussion, I would like to introduce two great BLG lawyers. Manoj Pandit is a securities and capital markets lawyer in our Toronto office, and we have Scott Robson, who joins me in the Calgary office here. So welcome to both of you today. So if we get right in, because we don't have a lot of time today, we're going to talk about the concept of a blind pool, and is it new to Canada? I've been practicing for a long time, over 25 years, and I can tell you that the blind pool concept has been here as long as I've been practicing. For example, the JCP program, called the Junior Capital Pool, started in Western Canada in 1986. And I think the really great thing about this blind pool concept was that when it was initiated in Canada, it really was a collaboration between the commissions and the exchange that was working with it at the time. And we have seen that collaboration grow, not just from one province to two, but all the way across Canada. It's been really good to see this almost have national breadth and depth. And over the past 30 years, what we've seen in Canada is really great investor buy-in on what it meant to do, what it meant to be, which was a capital pool that had a blind pool that bet on the management team and what they were going to be able to find. Canada is just a great place to get to market. And when you look at that, you can see why this history has been really positive now as we move into 2021. There's a strong regulatory environment, there's good corporate governance, and it's respected in the international marketplace. Even though a blind pool is a regime that is nebulous at best because there's not a business to follow or an operational management to work with, it's a really good environment. So what happens with the blind pool, of course, though, is you have an introduction of a company that is raising the money, and then you have to do what's called a qualifying transaction, an acquisition transaction, whatever that is. And that's really an M&A transaction. And hopefully we're going to talk a little bit more about that when we break some of these things down. But now I want to turn it into the flavor of the day, which, as everybody can attest to, is the SPAC. So Scott, help me understand the hype that's kind of around the SPACs. Can you tell me a little bit more about what you're seeing the increased interest about in Canada?
Yeah, there certainly is an increased interest. I often use this as an example. Brand new articling students that are coming through our firm, early 20s, that's one of the first questions they actually ask me about is what are SPACs and what's the story with them. So I think a lot of it has to do with kind of three primary drivers. The first and probably the biggest is, I would say, the social media influence and the emergence of kind of what we would call the Reddit investor. So there's various kind of subreddits like Wall Street Bets for one. And for those of you who don't know what Wall Street Bets is, it's sort of a subreddit where investors go to talk about investing and various plays and new companies. So those websites, I think, in the past probably 2 years have really gotten a lot of traction. And it's a younger crowd that's attracted to that website, often with a bit more of a risk tolerance. And they really do have the information superhighway at their fingertips. So they're educated, they understand these things. Whether or not they're always making the best investments, that's, we can question that, but they understand these new concepts. And so I really do think that's a big driver of the interest in these. The second thing you see is they're getting sort of celebrity endorsements. I don't think celebrity endorsements are a new thing, but it's a new thing that you have celebrities sort of endorsing these blind pool, blank check type companies. So that's really interesting. For one, you've seen Colin Kaepernick, for instance. He has sort of a social impact focused SPAC that he's a part of. So that's another big driver, and in some respects that does tie sort of back to social media. And then probably the third thing is you have sort of these major financial players, billionaires who in their own right are almost social media influencers, and again they're on social media and they're talking about SPACs that they're involved with. A real famous one was Bill Ackman's Pershing Square SPAC. That was all over Reddit and all over Wall Street Bets. So another good example just of how these things are really top of mind for the younger generation and the younger type of retail investor.
Well, thank you for speaking on my behalf. So Manoj, if we have, this increased interest in a new generation of investor and people who are interested in finding out more about it, how do you think, and what can you tell us about the SPAC in Canada?
Well, just before getting into that, I think you made a very good point in your introductory remarks that we've had a history of blind pools in this country, in our market, for many years, if not several decades. And that is sort of the branded capital pool company of the TSX Venture Exchange. It's been around in one form or another for that long. And it's garnered tremendous success for growth companies. Some of these might be viewed as micro cap companies or growth companies that are looking to tap the capital markets. And as many of us know, more than a majority of the companies that go public in Canada, at least the growth companies that go public in Canada, do so through a reverse takeover type transaction with a CPC. So the concept of a blind pool has evolved over that period of time. And it's only in recent years that, I shouldn't say very recent years, the SPAC program on the Toronto Stock Exchange, and then more recently on the NEO, the NEO has been around for several years. But we haven't seen, that many SPACs being formed or that many companies going public through the SPAC program, as you would expect. If you sort of take the 10% rule, and compare us to the U.S. market, we certainly haven't seen, 10% or even perhaps 5% of the number of SPACs or the dollars raised, the combined dollars raised, whether it's last year or the year before. So proportionately, we haven't seen that activity. And, one would have to speculate on why that is, but I think, one safe assumption would be, by way of explanation, would be that our IPO market has been very hot, and many companies have chosen to go public through the IPO route and have been successful in doing that. A big part of the rationale for that is, of course, the valuations that companies are getting. In some cases, companies are getting better valuations in the public markets through the IPO process than, for example, what they may be offered by private investors. And so there's probably a number of factors that have contributed to this, but it's interesting because the SPAC program has been around, as I say, on both the TSX and the NEO, and enter, of course, the G Corp. That's probably something else we should discuss as well.
Yeah, so I find it really interesting because what I have found is that you said, like, everything is hot right now in the markets. And even the CPC program has been churning out fabulous qualifying transactions. I mean, Scott and I have just worked on a couple, and I think when we looked at the marketplace, we would have seen that the CPC program would have just been for the micro. And that's where it initiated. But we're seeing transactions that are 100 million, 200 million, 400 million. And so the market caps of those transactions are complex. They are sophisticated, they are cross-border, and they are multifaceted in terms of industry. They are not industry specific. They really seem to have hit a rhythm as well. And you mentioned the G Corp now, Manoj, and I find that interesting because again, it shows how I think the Canadian marketplace is able to adapt, is looking at how both investors and the target industry community is looking for vehicles in which to maybe have liquidity events or go public. And Scott, I know you've looked a little bit into this new G Corp as it adds, a flavor to the blind pools in Canada. What can you tell us about those?
Yeah, they're really interesting. So, like you kind of said there, the G Corp is on the Neo Exchange, and they're trying to sort of build off the momentum that you saw with SPACs. It's right now it's actually a pilot program. It's a 12-month pilot program that'll be assessed at the end, and they'll determine if they're going to extend it, and obviously that'll depend on things like uptake. But it's an interesting program because it's trying to sort of target a slightly different market than both the CPC program and the SPAC program. So it's looking sort of in the mid-market range, sort of at high growth companies, enterprise value between $50 and $500 million, and sort of anything kind of tied to, we'll say in a lot of ways, tech, so your biotech, fintech, clean tech, all of that stuff, healthcare. I think that's sort of what they're positioning the G Corp program for. So it's really interesting that it's filling that gap a little bit. And in a lot of ways, it's kind of a hybrid, we could almost say, of a CPC and a SPAC. So I think probably the biggest and most important difference with the G Corp versus the SPAC program is that G Corps don't have sort of the mandatory redemption feature that you often see with SPACs and which is often talked about. So that redemption feature where investors can pull back their cash, it's often a bit difficult for all the parties involved because it's hard to determine how much capital is going to potentially be available when you complete your qualifying transaction. So in this case, the G Corp just has the shareholders vote on the transaction. So it still allows them, on the potential qualifying transaction. So it still allows them some participation rights, still gives them the ability to be part of the process, but also provides a little bit more certainty for all the parties involved. So it's a nice little hybrid that they've done there. There's some other differences where G Corps require a minimum founders investment. SPACs don't necessarily have that. A shorter time period for which to complete your qualifying transaction. G Corps are within 24 months, SPACs 36 months. So there is a few differences, but I think kind of the biggest takeaways are it's filling that gap that the Neo Exchange thought was there.
Right, and you really do see it as a link because you're using words like qualifying transaction and acquisition transaction. So even in the Canadian landscape, they use very similar language to talk about what's really the M&A transaction that puts the business into the blind pool. And Manoj, on that, because I know we don't have a lot of time left, but I think it's really important to tell anybody who's listening today what the relevance is of the M&A transaction. It's great to have the money in the blind pool, but really everybody's in this to have a business transaction at the end of the day. And I presume that there's a lot of things, given that we've been working in this area for over 25 years, that the tax, the securities, and the corporate things that need to be considered on any deal are pretty relevant. And would you say they're even more relevant if you're doing a cross-border deal?
Yeah, I mean, we each of the three of us have done cross-border deals with the U.S., and we're finding that U.S. companies are increasingly interested in CPCs, and to some degree now, I think there's interest building on or with regard to the G Corp. There is, naturally you're dealing with two different securities regimes and cross-border tax issues, so no doubt there's going to be elevated regulatory issues and concerns that come up. They're not insurmountable, but they certainly take time, and so it's important for a company considering this to get, good advisors on side early on both sides of the border, so that there's visibility on what the issues are, and so that they're, managed properly and effectively, and there's no surprises down the road.
Yeah, I think that's really good advice, especially if you're the target company, the operating company. Starting early, trying to determine what it is that the value add is that you're looking for in your blind pool, because I've found there's such a wide spectrum, and this is the same if it's a CPC, if it's a SPAC. I presume it'll be the same if it's a G Corp, that the management teams that build these blind pools have differing agendas, differing priorities. And that's the beauty of having one of these and having the choice as a target industry company, that you find something that works for you. But I think it's worthwhile doing the proper, and I don't even mean legal due diligence, I mean business due diligence. What is it that you're trying to source, and what is it that you're trying to do? Because they're not cookie cutter. I don't know if Scott and Manoj, you have found it, but I have found there is such a unique and creative way to set up these blind pools that target companies can be really, really flexible in what they're looking for, because there's such a great product availability out there. Would you agree?
Yeah, absolutely, I would. And now with the G Corp, there's one more sort of product, if you will, that we can add to the list. It gives both investors and companies just that much more choice. I think time will tell how they each compare. But I think it's very exciting that we've got one more vehicle to consider and offer companies, whether it's Canadian companies or US companies going public in our market.
That's great. Well, we're just about out of time, so I'm going to just have a snappy round of closing remarks. And so, Scott, what would you leave with us today?
Yeah, I think kind of going back to some of the first points we talked about was, capital pool companies, blind pool offerings, blank check companies, whatever we want to refer to them. They have been in the Canadian marketplace for a long time, and the Canadian investors understand them. As we've discussed, we have a new sort of player on the block with the G Corp, so the Canadian marketplace is really interesting. We kind of have a vehicle that's trying to tackle each sort of segment of the market, and I guess you have retail investors now that understand these things. It's not just limited to institutions or sophisticated investors necessarily. I should use sophisticated carefully, but it's you have these everyday investors that understand these and are excited about them, and so it's a real heady time for these types of vehicles.
Excellent, thank you. Manoj?
Yeah, just on that same theme that Scott, you were just talking about, I think that Canada has a long history of cultivating a public venture capital market, and so this concept is, you don't find in other markets, or at least not any other market that I've encountered. And really, public venture capital is about growth companies, companies in the sub $500 million valuation going public, and as an alternative to raising private investment. And it's a commercial decision, weighing a number of factors that a company needs to make. Whether to stay private and raise, let's say, another round of venture capital financing or private equity financing, versus going public. But our market is exceptionally well experienced or well versed in companies of this stage going public, whereas compared to, let's say, the U.S. market, a company at that size may not get very good reception on any of the U.S. exchanges.
Yeah, that's a great point. And I guess in summary, I really think these blind pools have a lot to offer, and their uniqueness, I think, is what is the main offering, and that the M&A transaction at the end often is as complex or as simple as the parties need it to be. And I just think the Canadian landscape is a really well-defined, well-regulated, well-received environment that should be considered an attractive place with lots and lots of bench strength from the iBankers, from the legal teams, from the management teams, and from the industry leaders. There's been a lot of years of experience that do this. So I hope that today has been of some interest, and that the blind pool concept is something that people would find intriguing north of the border, and that in Canada that we are also very intrigued with doing cross-border deals. And that if anybody has any further questions on this, Manoj, Scott, and Melinda would be really happy to answer any questions or to speak to you further about them. So just reach out to us on LinkedIn. Have a great day. Thank you.
Bye.
Thanks, everyone.